If you haven't heard about this new IRS rule yet, you need to stop and pay attention right now, because this could be costing you thousands of dollars you don't even know you're losing. There's a change happening in the tax code that most seniors have no idea exists, and if you miss it, that money is gone forever. This isn't about some small adjustment or fine print buried in a government document. This is about a real, legitimate deduction that could put up to $6,000 back in your pocket if you're single, or as much as $12,000 if you're married. And here's the part that should alarm you. This opportunity has an expiration date. It won't last forever. It has strict income limits. And if you don't claim it correctly, the IRS isn't going to remind you or fix it for you later. You simply lose it. Right now, while you're watching this, thousands of seniors are already planning how to use this deduction to lower their tax bills dramatically, but thousands more have no clue it even exists. The question is, which group are you going to be in? This new rule is called the Senior Bonus Deduction, and it was written directly into the tax code to give older Americans extra financial relief during a time when everything from groceries to medical care keeps getting more expensive. What makes this deduction so unusual is that it doesn't replace anything you're already getting. It stacks on top. You still keep your regular standard deduction. You still keep the extra amount you get just for being over 65. And now you add this brand new deduction on top of both of those. That stacking effect creates a much larger shield protecting your income from taxes. For a single person 65 or older, the total deduction could reach nearly $24,000. For a married couple where both spouses qualify, that number jumps to over $44,000. That means you could shelter that entire amount of income from federal taxes before you owe a single penny. Think about what that means for someone living on Social Security, a pension, or modest retirement savings. That kind of protection can be the difference between owing taxes and paying nothing at all. But here's what you need to understand. This deduction was specifically designed for low and middle income seniors. That means there are income limits, and if you earn too much, the benefit starts shrinking and eventually disappears. For single filers, the full deduction is available if your income is $75,000 or less. Once you go above that, it begins to phase out, and by the time you hit $175,000, it's completely gone. For married couples filing jointly, the full benefit is available up to $150,000 in income. After that, it phases out and disappears entirely at $250,000. Even if you fall into that phase-out range, you could still qualify for a partial deduction, and even a reduced amount can save you hundreds or even thousands of dollars. The reduction works like this. For every $1,000 of income above the limit, your deduction drops by $60. So if you're $10,000 over, you lose $600 of the deduction. That still leaves you with a substantial benefit. The key is knowing where you stand so you can plan accordingly. Now let's talk about the part that makes this urgent. This deduction is temporary. It only applies for 4 specific tax years, 2025, 2026, 2027, and 2028. After that, unless Congress extends it, the entire benefit vanishes. You have a 4-year window to take advantage of this, and then it's over. There's no going back to claim it later. There's no retroactive fix if you miss it. Once those years pass, the opportunity is gone. That means the decisions you make right now about retirement withdrawals, part-time income, or how you manage your finances over the next few years could directly affect how much of this deduction you're able to use. If you wait, assume it will always be there, or simply ignore it because it sounds complicated. You could be walking away from thousands of dollars that legally belong to you. So, what do you actually need to do to claim this? First, you need to make sure you're using the right tax forms. Seniors should use Form 1040 SR, which is designed specifically for older taxpayers with larger print and clearer instructions. On that form, there's a checkbox indicating you're 65 or older. You must check that box. Then, you'll need to complete Schedule 1A, which is where the actual calculation for this bonus deduction happens. If you use tax software, It should handle this automatically as long as you enter your age and income correctly. If you file on paper or prepare your own return, you need to know exactly which forms to use and where to report the deduction. This benefit only helps you if you claim it properly. The IRS will not apply it automatically. You have to take action. Here's another critical point. This deduction works whether you take the standard deduction or itemize your expenses. That makes it far more flexible than most tax breaks. You don't need to own a home, track every medical bill, or keep detailed records of charitable donations. As long as you meet the age requirement and fall within the income limits, you can claim it. This was designed to be accessible, not buried behind complicated rules. But that flexibility doesn't mean you can be careless. You still need to understand the limits, know your income level, and file correctly. Missing even one small step could cost you the entire benefit. Now let's address a dangerous myth that's been spreading. Some people believe this new deduction completely eliminates taxes on Social Security benefits. That is absolutely false. The rules that determine whether your Social Security is taxable have not changed. What this deduction does is lower your overall taxable income. And by lowering your taxable income, it might indirectly reduce how much of your Social Security ends up being taxed. For some retirees with modest incomes, the combination of all available deductions could result in owing little or no federal tax. But that depends entirely on your individual situation. This is not a magic switch that makes all retirement income tax-free. It's a powerful tool that works within the existing system. Understanding that distinction is crucial because making decisions based on false information can lead to serious problems later. Let's talk about what this really means in dollars and cents. If you're a single filer who qualifies for the full $6,000 deduction and you're in the 22% tax bracket, that deduction could cut your tax bill by about $1,320. That's real money that stays in your account instead of going to the government. For a married couple claiming the full $12,000 deduction at the same rate, the savings could exceed $2,600. That's not an abstract number. That's money you can use for medicine, bills, food, or anything else you need. For seniors on fixed incomes, savings like that can genuinely improve quality of life. It could mean better health care, less financial stress, or simply the ability to cover rising costs without panic. And here's something else you need to know. This deduction is available even if you're still working part-time. Many retirees take on a few hours of work here and there to supplement their income. This rule can help reduce the tax impact of those extra earnings. The benefit was created to provide genuine relief, not just move numbers around on paper. When used correctly, it helps stretch retirement dollars further at a time when every bit counts. But with any new tax benefit comes another serious risk, and that's misinformation and scams. Anytime the IRS announces something like this, dishonest companies and scammers see an opportunity to take advantage of confused seniors. So let me be very clear. You do not need to pay anyone special fees to claim this deduction. There is no secret program. There is no exclusive insider method. All the information is freely available from the IRS, and the forms are completely free. If someone contacts you offering to help you get this deduction faster or easier for a fee, be extremely cautious. Any legitimate tax preparer or basic tax software will handle this automatically once it's in place. You should never pay extra just to access something you're already entitled to. The IRS does not call demanding immediate action, and they don't require third-party services for benefits like this. Rely on official IRS resources, trusted software, or a tax professional you already know. Stay informed and stay cautious. Because this is a temporary 4-year benefit, it's also worth thinking about how it fits into your bigger financial picture. If you have control over when you take money from retirement accounts like IRAs or 401ks, consider how those withdrawals will affect your income relative to the phase-out limits. The same goes for part-time work or investment income. A little planning could help you stay within the range that maximizes this deduction. You don't need to make drastic changes, but being aware and proactive could increase how much you're able to claim. Small adjustments, like spreading withdrawals more evenly or timing income carefully, could make a real difference. The key is that now you know this exists. You have the chance to plan instead of react. Most seniors will never hear about this until it's too late. By paying attention now, you're already ahead. So here's the bottom line. This senior bonus deduction is one of the most significant tax benefits for retirees in years. It could save thousands of dollars for millions of older Americans, but only if they know about it and use it correctly. The rules are not overly complicated. The process is straightforward. The payoff is real. But none of that matters if you overlook it or assume it doesn't apply to you. This is a legitimate benefit created specifically for people like you. The key is staying informed, understanding the income limits, and claiming it properly during the years it's available. Remember, the window closes after 2028 unless Congress extends it, and there's no guarantee that will happen. The choices you make over the next few tax seasons will directly impact how much you save. Whether you do your own taxes, use software, or work with a professional, make sure this deduction is on your radar. You've worked for decades building financial security. Taking advantage of every legal tax break available is simply part of protecting what you've earned. So as you think about the next few years, keep this in mind. Talk about it with your spouse, your family, or your tax preparer. Look at your income and consider how this fits into your plan. A little awareness and planning today could mean meaningful savings tomorrow. Knowing this opportunity only lasts a limited time, what are you going to do to make sure you don't lose thousands of dollars that should be staying in your pocket?